we don't want to hold you up.
Correct.
You have a spa day.
I gotta go.
Spa day. So since you have to get going, Mary Beth, I'm going to start with you. Since you are the one that use Mortgage Coach the most at Revolution, I would love to hear how your thoughts on Mortgage Coach, how you're using it, and what your borrowers think of it.
Okay, I've been using it forever. So I mean, even back in the day before you all had the video, I used to type it up, and so I've been a lifelong member of Mortgage Coach, and I use it for every single client that I meet, and I think, in my opinion, it's the best, tool, for advising clients. There's so many different things you can do. I do rate versus cost. I do different options. I do different type of PMI. I do appraisal gap. I do rent versus own. I do cost of waiting. I do investment strategy. I do debt consolidation. You name it, I use it. And it's video, and you can do it live with your client, and any change you make is an automatic change for the client to see. So the way I use it, I will, depending on the client's needs, I prepare it, and then I do my little video, and it's the same message every single time. So it takes like 2 seconds for me to do, depending on the analysis. And then I would say 99.9999% of the time, the clients love it. They love it. So no one is presenting information this way to their clients. And so if you all are trying to build a successful business with, as a mortgage advisor, with our value prop, trying to help clients create wealth through real estate by making smart mortgage decisions now and in the future, it's a win-win. So, I mean, I love it. You can see how many that I've done. I'm a red belt. I'm the highest you can be, right? So, I mean, I use it every single time, and I don't lose deals because of it. So, it's a great tool. You're helping families, and they love it. And so, I do my video, I send it. Some people are like, oh, great, that's great, I want column 2. And I'm like, perfect, all right. And then they'll say, hey, great, when you have time to go over these in more detail, then we'll do it live. I open up on my end, they open up on their end. They'll say, hey, change something, I'll change it, and they can see it. But I mean, it's great. I mean, you walk into a realtor office and do an appraisal gap. I mean, yeah, realtors are going to look at you and say, no one else is doing this for our clients. Financial planning clients, oh my gosh. I partnered with a big financial planning firm. I did two debt consolidations and then investment strategy, because, people are, want to pay cash for their homes, and they're looking at themselves like, why the hell did I do that? So, and I'd show them the power of leveraging, then investing it, at a higher rate of return, blah, 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 how much wealth you have. So you can do short term, you can do long term. There's so many things, and it's easy. So, I think you can do a total cost analysis in, 2.5 minutes. So, our fees are saved in there. So I have a purchase fee screen, a refinance fee, boom, it's done. Pretty much everybody's, 30-year fixed, 2015 rate with the 0 points, no cost. The appraisal gap showing a client that it doesn't matter. They don't have to put 20% down. If they have to offer 10% over, the payments are same. It's just financed MI. I mean, there's so many different things. So, I mean, I can just keep going on and on and on. So, I swear to God, and my production. So, and I'm telling you, having Mortgage Coach is a game changer. Being part of the Mortgage Coach family is a game changer. And so you learn from the best, and then you don't reinvent the wheel. You just do what they do and make it your own. I mean, I speak differently than somebody else speaks, but it's all the same. I mean, we should all have it. I want the enterprise. I can't have the enterprise unless we have enough branches.
Well, that's a good segue. What does the enterprise get us that you don't have now?
Jacob,
integrations.
Jacob, are you smiling? I mean, she could be part of our sales group.
I know, Mary Beth, I was going to ask if you could do the demo today because that was awesome.
I mean, I swear I would do demo. I know there's a girl in one of our offices. She goes, I have Mortgage Coach, but I don't know how to use it. And I'm like, I said, well, I'll help you. So next Tuesday, we're going to connect. I'm going to show how to do it. I'm like, I don't know. And it's funny, right? Because I don't want anybody else using it in my area. You know what I mean? So.
My precious. That's right.
Yeah. So enterprise, please tell everybody what we get if we're enterprise.
And that's what Jacob's going to show you. He's going to kind of show you what you guys, what a single user like Mary Beth has right now, and then moving to an enterprise deal, what that will get you.
Okay.
So
great.
It's a good and Mary Beth.
All right. Thank you. If anybody has any questions, I mean, I can show you, I got a gazillion of them. I can show you every one I do and say, oh, okay, here's this for this borrower, or here's for that borrower. And I'm telling you, that value proposition is huge. You just want to do loans, then have at it. If you want clients for life, you use this. I built my business, and Joe knows this, Tim knows it. I only work with a handful of realtors. That's it. I'm not cold calling. I'm not prospecting. I'm not doing any of that because all my clients are past clients, referrals, and I built my business on that model. Todd Duncan follower, right? Relationships.
Nice.
And I built it that way. I don't have to deal with the realtor. I don't have to say, oh, I can't use the F word. Oh, you're only good as your last screw up. You know what I mean? It's like, whatever. So, I think the way I built my business is the right way. And it gives, me the flexibility to choose who I want to work with. And, and sometimes they take my intellectual property. Okay, whatever. But, good for you. I'm glad I helped you make the right decision and, go rate shop me. But 9 out of 10 times you've got the client right then and there. So,
well, I mean, it's funny that you say that. I've talked to a lot of LOs lately that said that they were getting rate shopped, not as much, but they're getting rate shopped. And there are a ton of stories that say, well, they went to another lender and they actually came back to me and went with me, even though the other lender had a lower rate. Because it was all about just, here's your rate and here's the closing costs, and they weren't giving advice and they weren't giving the hand holding and, security.
But it's not, but it's not only that. So like our market now, the average, we have due diligence in North Carolina and then closing dates, right? So everything has to be done by the DD date. And you cannot get, like, first-time home buyers are so screwed in this kind of market. Like, I'm sure everybody else is feeling the same pain for your first-time home buyers. But the average DD in my market is between 20 and 75,000. And if you can't get a loan by, can't get that loan for them, they lose that money, period. So most of those listing agents here, they're not taking offers from Beta.com or freaking Rocket Mortgage. They're not even accepting them. I mean, I could do a thing right now to every single realtor, say, you better trust who you're working with because you got a lot of money on the line with your clients. And I did a perfect example. I ran numbers for an investment property purchase, and credit union doesn't differentiate between investment, second home, and primary. So you can't compete with the credit union. If you're a member and they want to buy an investment property, they get the same interest rate. Well, their closing date is December 18th. And the client was like, Mary Beth, thank you. But I mean, I couldn't compete with it. I said, this is the better option for you. And then I get the call. They can't close it.
Yeah.
And you only get a 7-day extension with your DD. And his DD was 40 grand. So now,
wow,
instead of the 3.25, he's at 3 7/8 with the point, because 40 grand. And I'm looking at him like, dude, the cost is nothing. We're not talking a huge loan here. And I go, $40,000 on the line. And so I got that client back. But anyways, but 9 out of 10 times, I'm not losing that client, or getting rate shopped. I don't quote rates anyways. I only give averages when I run Mortgage Coach. So
good. Well, go enjoy your day, the rest of your day.
I will. Gotta go get a massage.
There you go.
Everybody, make sure to tell everybody to wish me a happy birthday. Woo,
happy birthday, and I'm sure I'll talk to you soon.
all right.
Happy birthday, MB.
All right, love. Thanks, Joe.
Yeah,
You
thank you.
all get Mortgage Coach, please, please, please. I want the enterprise. Thanks. Bye.
Bye.
All right, so to kind of answer your question in a nutshell there, Joe, the difference on the enterprise versus just the standard single user account is a single user account doesn't have any of the big integrations like Optimal Blue or Closing Corp or the MI partners and so forth, or Encompass for that matter. So an individual user, like what Mary Beth's been doing for so long, is she's been creating these from scratch. She's not using any of these integrations to pull down pricing or to pull down costs or pull down MI quotes and so forth. So she's having to go to alternate sources to grab that information and plug it into Mortgage Coach. That's one of the main advantages from the LO side. There's another side to this too, though. As an enterprise account, you get a client management portal where you can actually manage your entire roster of users. You can set your disclosures, disclaimers at the top level so that your LOs can't touch those. You have all kinds of different security locks you can put in, like you can stop them from deleting files for compliance and stuff like that. You have admin oversight over history records and so forth. So it really just gives you a much bigger picture of what your users are doing and much more control about how your branding is displayed and what types of things are shown to your borrowers. But that's just kind of the very high level difference between the two. And what I'll show you today is I'm going to start off just showing an example of one of the presentations. For the rest of you on the call, if you were on the last demo, I wasn't on there. So this is going to be a little bit different flavor for you today. Just kind of follow along with me. If you have any questions while I'm talking, please put them in the chat in Zoom. Happy to address those as they come through. If I'm going too fast, let me know. Hey, Jacob, slow down a little bit. Let's see that one more time. I'm happy to do that for you. But I want to start off with giving you the borrower experience. So I'm your LO. You guys are all my borrowers. So what I'm going to do is I'm going to put a link in our Zoom chat right now. This is a link to a Mortgage Coach presentation. Now I'm not showing my screen to you yet. So go ahead and click on that link. It's going to open up in a new browser and you're going to get the borrower experience. I'll wait just a moment while you guys are doing that. And just so you know, I can actually see I've got 2 viewers. There's 3 viewers. So I'm getting a visual notification as people are clicking on this link. I've now got 6 viewers. So you guys are actually all getting the experience. For those of you that have the file open right now, you've landed on the disclosure page and you're just getting my sample disclosure there. But these are the disclosure disclaimer language that you can set at the top level. So, you don't have to think about this as the LO. This always comes across on all your presentations for your borrower. Your marketing and compliance team can set this language so it's appropriate for your organization. Now, once you hit OK on there, and go ahead and hit OK if you haven't done so yet, you're going to see the full presentation. And you're going to get, on the left side, you're going to see kind of a chart view of some different options. On the right side, you're going to see some monthly graph views. But here's where we diverge in terms of just a leave behind asset versus a live asset like Mary Beth was talking about. Now you're looking at my report in your browser. Now, if I'm your LO, I'm calling you up because I just got a view notification that says, Joe Klein is now viewing your presentation. So I've opened up my side and I'm going to give you a call. I'm going to say, hey, thanks for viewing my presentation. I wanted to make sure that I could give you all the information you need to make an educated decision on your mortgage. So I'm going to walk you through this real quick. Now, when we originally talked, you were talking about a 10% down loan. So I went ahead and highlighted that on your screen for you right now. That's the first option we're going to talk about. You can see that for that option, we can get 3.375, and you're looking at just under 60 grand to close there. And you told me you had about 60 grand in the bank, but that you could potentially borrow more funds if necessary. So I wanted to give you some options on what you can do with this.
Hey, Jacob, when I opened mine, it was actually under a different view. I'm not sure if that's the case for everybody else.
It was under a different view. Hang on a second.
Yeah. I mean, I switched it because I know how, but I just want to make sure I want to make sure that they're following exactly what you're doing.
Are you talking about horizontal versus vertical?
Yeah, it was vertical.
So I'll explain what that does. So by default, our presentation will either load horizontally or vertically, depending on the size of your monitor. So some of you may have gotten this in a landscape view. Some of you may have gotten it in a portrait view. But in any case, I'm able to actually drive what you're seeing. So I had started off by highlighting that 10% down program for you. You should have seen that highlight on your screen. And if you're in vertical view, it actually would have probably scrolled down just a tad to make sure that that area was in view for you. Now, as I continue through this presentation, I'm going to do things like I'm going to highlight other topics. You know, we talked about, okay, here's your 15-year term using a 10% down option. And you can see we can get a much lower rate on this one. You know, and actually it looks like this is not a 10% down option, but I'll go ahead and change that in a minute here. But you can isolate the different points within this presentation. And you can even start talking about some of the terms that they're going to be seeing when they get the loan estimate. Things like total interest percentage. TIP is really confusing for borrowers. So it's helpful to get out in front of it and let them know what this is actually doing. Things like the 5-year costs that they're going to see on the loan estimate. These are, you know, another option that's just really confusing. And unless you know exactly what this means as a borrower, it kind of doesn't make sense to you. And then I would continue going through these options and pointing things out like, okay, well, here's another option with just a 3% down. So much lower down payment for you. Obviously, it's going to result in a higher monthly payment in certain instances. And then I've got another option where I'm showing you how to take a bigger down payment and use Radian for MI on this one and see what kind of savings you can get. Now you want to keep in mind, this is all sample data. So that's why like that 10-year, that second option there is really not a 10% down loan. But you get the idea. You're stacking multiple product options next to each other. You can walk your borrower through it in real time. And as I continue going through this process, I'm going to dive into the more info sections with you. And I'm going to talk about things like the payment breakdown. Hey, I just popped open the payment breakdown for you. You can see that, you know, the hazard insurance and taxes are pretty much the same across the board for all these guys. The main difference comes in when we start looking at mortgage insurance options between these ones. And then finally, I'm going to take them through the other options. I'm going to go into the closing cost details and I'm going to show them, look, these roughly all have the same closing costs, but you can click on these fee detail options and you can actually see the itemized fees for each one. And you can see some of these I've loaded in really verbose fees. Some of them I've loaded in just kind of general standard fees in there. And then finally, I'm going to walk you through the reinvestment grid. Now, this is one of the things that Mary Beth was talking about, where you can take money from, you know, monthly savings, or you can take it from down payment savings, and you can show what happens to that money otherwise. So for example, in that first option, they started off with 75 grand in the bank. Their cash to close was 58.6. They end up with a savings start of $16,000. I've got a 0 rate of return on these guys. So I'm just showing, you know, what would that money be over time if you just left it in your mattress. Now, this is where Mary Beth diverges here, because she'll use a savings rate there and show the growth of that money. And it can be really powerful, especially when you're talking about partnering with a CPA or financial planner to determine long-term wealth for your customer. Now, this is also where we can indicate things like extra principal payments. So in that third option there, I just highlighted the extra $300 principal payment that goes into the loan. And what that does is that takes this loan from a 30-year loan to 23.67 years. That freedom point is when you'll pay off the loan. So this gives you a lot of really creative options that you can show your borrower in terms of how do you want to manage this loan over time? You know, do you want to carry it full term? That's cool. We can do that. But let's do something with the money that you would otherwise be spending on that 15-year note, or let's do something with the money you'd otherwise be spending on a down payment. And let's show what would happen over time if that continued to grow, or if you just left it in your mattress, like in this case. And then when I get through that section, I'm going to start going into the graphs. And on the right side, I'm going to say, you know, you can see that 15-year term, it's the highest cost. It's the highest monthly cost because it's a 15-year term. You're going to be paying a little bit more principal, a little bit less interest. And each of these graphs is relative to that 15-year term. So for example, that first option is $1,200 less a month than the 15-year option is. So that's why I indicated taking $1,200 and putting it straight back into the bank every month. And then I'm going to dive into some of the more info sections within those graphs. I'm going to say, okay, well, you know, we talked about what these graphs are showing. Here's the data behind the graphs. So, you know, here's your monthly payments. You can see how they're stacked against each other. You can see which is the highest and which ones are saving money against it. Now you'll notice that at the bottom, the total payment is actually pretty even between them. That's because I'm earmarking the difference between the payments to go back into your investment account or into your savings account. Now then I get to the real meat and potatoes of this presentation. You know, the part that exceeds what other loan officers might be showing with just a rate and term quote. Instead of just focusing on rates, terms, and payments, when you get to the short and long-term area graphs, like the savings over 60 months, you'll see that we're actually showing how much interest in MI this borrower will save over time between these options. We know that interest in MI are really the unrecoverable costs of doing a loan transaction. You know, principal, they're retaining it as equity. It's not really a cost. So what are we doing? We're identifying what are the real costs of each one of these scenarios over time. And these time metrics are editable. So that 60 months, you can put whatever you want in there. In fact, I can go in and change that on the fly for you, which I'm going to do right now. I'm going to change that one to be 84 months. Let's say you wanted to actually look at a 7-year proposal on this. I just changed that on the fly in the backend systems, and it updated on your presentation as well. And then as I keep going through this, I'm going to dive into the more info sections here. You know, I told you that interest and MI are really the determining factors of what each of these loan programs is going to cost you over time. That's illustrated right here. And you can see which one's the highest cost. That 3% down, because you're bringing in less down, you've got a higher payment, you're paying more interest over time, and you're paying MI on that. That's where the real cost of these loans is coming in. Finally, I'm going to transition to a long-term conversation. Now, I've shown you what your money's going to do over a 7-year period of time, but let's take a look at what your net worth is going to be over a slightly longer period of time as a result of taking some of that monetary savings every month and just putting it back into your bank account. And you can see as I highlight these, if you were to hover your mouse over each one of these graphs, you'll see that it'll display how much of that is assets and how much of that is your equity. And, you know, there's use cases for both. That second option with a 15-year term, it's mainly equity because you're paying a lot of principal there, and it's, you know, less liquid assets because you don't have a whole lot of monthly savings there to reinvest. So it's just whatever you had left in the bank continuing to sit there or grow if you indicated a yield rate on them. But the important part of this is you can actually show different types of metrics here too. You know, I've started off with net worth because I think that's the most important for this particular conversation. But I also want to do things like I want to show you the interest in MI over the long term. So I'm going to go ahead and change that on your presentation. And you're going to see those graphs recast real quick. And you can see which one pays the most interest in MI over time. And that actually tells the same story as that short-term area did over the 84 months, is that 3% down option. It's the one that's going to be the most costly for you. However, it is the one that requires the lowest down payment. So we're not shooting it down. We're showing the borrower some options here. Now, I know that was a lot to go over, so I'll stop for a second and just ask if anybody has any questions on what you've seen, and then we'll go ahead and dive into what the originator's view looks like. All right. Well, I'll keep looking out in the chat if you do have questions. I know I didn't give you a whole lot of time to type in there, but if you do have questions, please do go ahead and add them. I'll circle back on those and make sure to get those answered for you. All right, so at this point, I am going to share my screen with you now. So I just went ahead and shared my screen. You should be seeing that same presentation on my screen. If you're not seeing it immediately come up, go ahead and right-click on your Zoom icon down at the lower part of your screen, and then you'll see a couple of different Zoom options available there. Just choose the other one besides the one you're on, and it should open up the view screen for you. All right, so hopefully you guys are all seeing my screen now. When I was driving you through the presentation, I was on a highlight version of the presentation. And you can see up at the very top right here, it shows me how many people are viewing this presentation right now. So I have 15 people that are watching me do this presentation. So when I was highlighting for you, I was just coming in and clicking on things. So, you know, I'm talking to you, I'm highlighting. I know that this is going to happen. The highlight's going to come onto your screen within probably 1 to 2 seconds after I highlight it. So, you know, I've timed my cadence of my voice to make sure that things hit when I expect them to hit. But beyond that, this is just the output. Now, when I went to do things like change things like time metrics and the long-term metric for you, I actually went back into the advice engine. Now, the advice engine is where you build these presentations. So, you know, this one, obviously I pre-built a while back, but this is just a standard, it's a standard set of questions you're already asking your client during the initial consultation. So you're picking up things like their contact information. You're getting things like the property address, if it's known. It might be a TBD, doesn't have to be perfect. You're getting their goals. You know, what is this person trying to do? Well, they're trying to purchase a new home. And that being the case, we're really not going to ask a whole lot of refi questions here. We don't need to know about their current mortgage. We do need to know what kind of property value they're looking at. Then we're going to collect things like affordability. None of this is required, by the way. The more you collect, the more robust you can make the presentation, but it's not required at all. You can see I didn't enter a gross annual income here, but if I do, I'll get things like DTI ratios. If I don't, I just won't get the DTI ratios. Now, I did enter a savings balance here to show what the borrower actually has in the bank, so I can determine what products can they actually afford. Then I'm going to collect things like what are their goals with this? You know, what's their ideal mortgage payment? You know, what's their ideal price ranges if this hasn't been determined? In this case, I'd already talked to the borrower, so I had this determined already. I didn't need to use this to help me. So I left it blank. And again, perfectly okay to leave lots of fields blank in here. You'll see which ones are required. Now, when I get into actually preparing the presentation for you, I'm building out multiple scenarios. So you can see in this case, there's my 30-year, the 10% down at 450. I've got a rate, I've got a term. Now, where the integrations come into play is if I don't have a rate on this guy, I can go down and hit this get pricing button from Optimal Blue. And what this does is it triggers a form, finds me as the user in Optimal Blue, and it pre-fills a lot of this data based on whatever I already have filled in the wizard format over here. But you can certainly change this if you need to. The FICO is just always going to show 750 because we pre-fill it for you. We don't collect a FICO from you. So if you do need to modify this, you certainly can, or you can just run the search as is. But I go ahead and hit next. This reaches out to Optimal Blue and finds all the prices that are available for the different products. And I'm going to do something like maybe I'll sort by rate, or if my conversation is about getting a rebate from my client, maybe I'll sort by rebate. And I'll choose the best option that gives them the most rebate to cover some closing costs. So let's go ahead and choose that. And when I choose that, you can see it pops in the rate for me. And then as part of that, it also brought over my rebate, which is right here. So there's my negative points that amount to 2782 rebate. Now, other integrations inside of the closing cost detail, if you guys are using a fee aggregator like Closing Corp or Lodestar or any of those, Ernst, we actually have integrations there where you can call out and get your fee detail for all the title fees. Now, Mary Beth, what she's doing right now is she's actually using templates. So she's pulling down her conventional 30 fixed template, she's making any modifications she needs to, and then applying it to the loan. But you can see we really try and take the thought process out of this. So you don't have to worry about it. I'm going to go ahead and apply that to the loan. And then I'm going to move forward, and you can see, you can put in things like the hazard and taxes. If you just want to show P&I payments, that's perfectly okay. You don't have to put them in. Just make sure to keep it uniform across the board. And then you can reach out and get MI. So in this case, this is another integration that would be available. Where you could select which provider you'd like to check. And you can see initially I ran my search with Arch. I'm going to find out what MGIC is going to give me on this one. So I trigger the MGIC form. Had I put in my gross annual income back here, it would have filled in these debt ratios for me, but I'm going to go ahead and just pop them in there now. And then you can select whether you want to do a monthly or a single premium MI type. I'll choose single premium just for you. And then hit next. And then there you go. It brought back my single premium quote. If I hit OK here, you're going to notice that it's already pulled out the monthly MI here. So I'm going to hit OK there. It changed it to now the quote was provided by MGIC. And if I go back a screen now, I'll see that that single premium is actually already in there. So I didn't have to worry about doing any data entry. I just had to go and retrieve the quote and pull it back in. And then your next step is to compare multiple products against each other. Showing one product is going to produce some empty graphs. You know, as we saw back on the main proposal here, those graphs on the right are comparative graphs. So you're always going to have one product that has an empty level and everything else is going to be compared to it. If you only have one product, you're going to have an empty graph. So we always recommend do at least two products. And those two products can be any variation. You know, you might have an FHA versus conventional type of conversation, or you might have isolated it down to this borrower only qualifies for this one loan type. That's okay too. Show them different pricing options on that. Here's what it looks like with a rebate. Here's what it looks like if you got it at par. Here's what it looks like if you brought in a little cash to lower the rate. So there's always options available for what to show here. And once you're done putting it together, you can actually choose which options you want to show on the report. So by default, I showed all four for you guys. But let's say that 15-year option, it was just too expensive, and the borrower came back and said, you know what, nah, let's take a look at the 3 and 10s. So I'm going to go ahead and just remove it from the presentation. And when I hit next, it will automatically remove it from the live presentation. So now I'm just focusing on the 3 products that the borrower wanted. Now, beyond that, the analysis screen is where you can do a lot of that really detailed reinvestment advice. So you can see things like the same graphs that are going to be on the presentation. And then you can go into the reinvestment strategy and say, well, you know what, let's see what I can do with this monthly cost savings. I've got $1,300 to work with. Let's put $1,200 straight back into the mattress. Or maybe you are working with a CPA or financial planner. You want to put it into a higher yield account. So we put it in 1,200 at, let's say, 3%. And now we can show growth over time as a result of that monetary investment. And you can actually do a combination of things. So like in this case, $1,300 savings per month. Well, let's put $500 back into principal every month. And let's put $200 into your savings. And then let's put $600 into this investment account. All 3 of those working in unison, I'm now producing a low freedom point. So we're going to pay off the loan faster because of this extra principal payment. I'm putting money back into their current savings account. And then I'm putting money into this new investment vehicle that actually has a yield rate on it. And you can specify a yield rate on their savings account too. It's just, you guys all know, savings accounts like 0.01, 0.02. It's negligible. It's like putting money in your mattress. So I like to show it with a 0 here, but certainly you can feel free to show it otherwise. Now, one really cool factor in this is that there's also this function here to pay off the note when you have enough money in the investment account to do so. And it'll alter the freedom point as such. So when I check this box, you can see that at 13.4 years, I've paid down the note enough and I've collected enough money to be able to pay off this loan. So really cool type of conversation that you can have with your client. And you notice for the last 15 minutes, we haven't mentioned rates, terms, anything like that. We've been all about consultation. So that's really the point we're trying to drive home with the Mortgage Coach total cost analysis. Now, some other things that I should point out within the editor here for you. On the right side, you have a toolbox where you can immediately get to video recording. So I had popped open a preview so I could highlight the screen for you. But if I want to add video to this presentation, I'm going to choose video and hit OK. This is going to open another preview of the presentation, but the difference is this is asking me, how do you want to record your video? You want to send it to your mobile device to record? Do you want to do it in the web browser? Or do you want to just do an audio only presentation? I'm going to choose in web browser. And there we go. Let's see it popped up for me. I'm just going to move it up to the top of the screen so I can keep eye contact with everybody. But the player is really easy. It's built into the browser. You don't have to download anything. All you do is hit record. Hi, Mr. Borrower. Thanks for your time on the phone this morning. I prepared a couple of options based on what we were talking about. You can see I went ahead and removed that 15-year option because I know that was a little too pricey for our conversation, but you've now got a couple of options that I think might work for you. Take a look at this. When you're done viewing this, give me a call because you're going to have more questions and I'm happy to answer them. Thanks. Tell Joe Realtor I said hi. Stop. Upload this guy. Takes just a moment to upload and convert into multiple formats so it's available on any device that the borrower tries to open this on. And now if I was to take that same link that I put in the chat for you and just click on it, my presentation starts off with a disclosure and then goes immediately into the video. So you can see it's a seamless opportunity to put video on presentations without a whole lot of work. There's even the option inside the advice engine to use default videos. So for example, when you go into your presentation settings, you can actually do a default presentation video. This will show up on any presentation where you don't have a video yet. So this could be something really generic. You know, hi, this is Jacob from XYZ Lending. Really happy to be doing business with you today. I've prepared this presentation for you to help you understand the different options that we're going to be discussing. Make sure to give me a call when you're done viewing this presentation. Kill it. And then you use that on every presentation. You can actually go in and as you add videos to those presentations, it'll supersede whatever the default presentation video is. So real simple to do a setup where you don't have to do a whole lot of work for every presentation and you can just kind of customize the ones that you need some additional information on. Now, back to settings real quick. Beyond that, We try and make it fun for you too. This gamification here, you can win badges for the different elements that you've accomplished. You know, how many total cost analysis views have you had? You know, have you gotten a bunch of rent versus own views, seller buy downs, open house presentations? But the one that people really like the most is the belt view. So when you start off, you are a white belt the first time you log in. And as you transition through creating more proposals, you're going to transition through belt schemes. And, what Mary Beth was saying about being a red belt, she's got over 1,000 presentations. She has gone from student to master on this one. She's got every element of the program mastered. Now, one thing she's missing that we saw today is the integrations. So that's only going to make it faster and more effective for her. So I'll go ahead and stop there. Chris, was there anything else that you wanted me to show for this particular call? As I said, I wasn't on the last call, so I'm not sure what I might have duplicated here.
No, I think that was good. I mean, you kind of showed them, you know, if in Mary Beth's case, you know, what they have to do to create a TCA. And now I think what you were just about to do is great. You know, now show them, okay, with the integration, if you had Optimal Blue, this is a different kind of experience and this is what it would look like.
Now I will show you one other side to the Optimal Blue integration that's pretty cool. When I initially showed Optimal Blue, I showed it from inside the Mortgage Coach application, reaching out to get pricing using this button. But there's another side to this equation too. If you started off in, let's say you're in Encompass and you use the pricing tab to reach out to Optimal Blue to get pricing in Encompass, it actually frames in the Optimal Blue window. I'm going to go ahead and log into that real quick to show you that. It should look pretty familiar once I get in there. Let's go to Pipeline. And I'll find the borrower that I just created for you guys this morning. All right, there we go. So this screen actually gets framed into Encompass, and you can select the different pricing options that you want to look for. So let's say I want to look for the 30-year and the 15-year options. I want to see fixed and ARMs. And then I'm going to go ahead and hit submit. Now this is your current workflow, so nothing's changing here. The difference happens is that after you submit this, you're going to find that there is a new column here called Mortgage Coach, and there's a new button up here called Mortgage Coach. What this allows you to do is select up to 4 options and send them over to Mortgage Coach to create a presentation. So for example, let's get this 15-year fixed. Let's get a conforming 15. We'll get the 30-year. And we'll get a 30-year home ready. Now I've chosen the par rates, but you can actually drill into these and select options on either side of par if you want to. So I'll do that on this one actually. I'm going to deselect that, and let's say I want to get the one with a slight rebate. So now I've selected 4 options in Optimal Blue here. I'm going to go ahead and hit the Mortgage Coach button. This is going to pop up a little modal screen that's going to allow me to rename before sending over to Mortgage Coach. So I might do something like that just to kind of keep it easy for the borrower to understand. Then I'm going to hit Launch Mortgage Coach. And this is sending these 4 presentation scenarios over to Mortgage Coach, creating a presentation and dropping you straight into the video. So now I can pop a video on this, and this presentation is just about done. Now, the one thing I would need to do is I would need to jump back in here because you guys probably don't house your fees in Optimal Blue. I do. So that's why my fees came over. But if I jump back over into my advice engine now and go to my automated tab, this is where I can pick up any files that are passed across by an integration. So I can do things like I can look for, ooh, let's go into the right account here. Let's go to my integrations account where this landed. There we go. So I go into my automated tab, and there's the one I just passed over from Optimal Blue. So Revolution Borrower, I pull that open, and you can see these are the options that Optimal Blue sent over. There's my 15-year fixed note. It's all priced out. Everything looks good on it. I have costs in Optimal Blue. You guys probably don't. So yours would look more like this. And then you would select a template here. So select your conventional purchase template, apply that to the loan. And you can continue moving forward on these, but a majority of the legwork has been done by the Optimal Blue path. So it makes it really easy to start a presentation in Mortgage Coach if you've already got it elsewhere. Now that's from Optimal Blue direct to Mortgage Coach. There's one other integration I want to show you real quick. And I'm sure some of you have been thinking about it since I mentioned Encompass. You can import directly from Encompass as well. So if you go to new client, I don't have any client information yet. I'm going to go ahead and hit the import button, choose Encompass. And then I'm going to choose which folder I want to go through. I'll go through my pipeline and I'm going to search for this borrower whose last name is Demo. Obviously, I've got a couple of demos in here for you. Then I'm going to select the one I want. Hit OK. This is going to retrieve that information directly through Encompass's API and populate it into a borrower record. So it's created my borrower. I've got some basic contact information that came over from Encompass. I've got the goals that came over from Encompass. In this case, you can see it actually also brought over the liability debts because credit was run on this file. So if you wanted to do debt consolidation, you could. But I'm not going to for today because this is just a standard purchase. It brings over the property value, some affordability things like their annual income and their savings balance. And then it brings over as product one, the loan from the 1003. So this is just the application loan. It brings over your closing costs from Encompass. So if you've already got closing costs set in Encompass, it pulls all of those in. And you can see even fees that we can't map directly, like the write-in fees in Encompass, we'll still group them under their respective areas. So like these are the 1100 fees. They get grouped into a roll-up fee. But the idea there is you didn't have to do any legwork to retrieve the closing costs, the points, the prepaid interest days, nothing. It's all in there. Monthly costs came over from Encompass as well, even down to my MI because I already had MI in Encompass. However, if I wanted to reprice that, I could certainly use the integration to reach out and grab a new price quote from any of these providers. And my next step there would be to just create an additional product. So I'll add another product. I'm going to copy that first one. And let's say this one is taking a slightly higher rate and getting a rebate. So, or actually, let's say that's at par because the first one, they were actually paying discount points. But now I've got two valid options next to each other. There's a slight difference between these two, but I'm showing my borrower that, hey, with this option, yeah, it costs you $30 more per month, but it saves you $2,800 in interest over the 60-month period of time. Which one's better for you? Is it better for you to save the monthly cash flow, or is it better for you to save the interest over time? And then I can certainly go into their investment strategies and start working up some different strategies for them. Now, finally, when I'm ready to deliver this to my borrower, you can tailor the welcome message if you want. You can add payment notes. People like to put things in here like estimated taxes and insurance are included because they appear directly on the presentation. So I'm just put payment notes in here so you can see where it goes. And then finally, I'm going to get to the end of this. I'm going to pop a quote date on there because anytime you disclose a rate, you want to tie it to a date. Then I'm going to generate my link. And this is the link that I'm going to send to my borrower. Now, most people are copying and pasting this directly into an email. You can also hit this little email button here and it will trigger your email client with an email started up and ready to go. We don't send an email directly to your borrower. So all we're doing is triggering your client. We're plugging in the borrower link here and getting it ready to send for you. So you'd want to wrap some text around this, talking to your borrower and then fire it out. Some other things real quick on the right side here. We talked about the toolbox. There's some options to immediately get to video and highlighting. You can also suppress a presentation. So if you're not quite done with the presentation, but you still want to send the link over to your borrower, you can say it's not ready for my borrower. And then when I try and click on that link, I'm going to get a slightly different experience. So you send this link to your borrower and you've marked it as not ready. It's going to say, hey, I'm not ready, but then it's also going to have your default video for pending presentations if you've recorded one. And I can easily, as soon as I'm ready for this, as soon as I've completed this, I'm just going to go back and hit yes, it's ready for my borrower. And then trigger a save by moving between the screens. And if my borrower was to click that link again, they're going to get the full presentation. There's also some extra tools here on the right side that can be really helpful for you. OB's mortgage market indices. These are the locked rates from yesterday from about half of the total locks that Optimal Blue got. So this gives you a good understanding of what your peers are locking these rates at. This is kind of the industry average of what the 30-year conforming locked out yesterday. What did the FHA lock at yesterday? What did the 15-year notes lock at yesterday? Just gives you a good barometer for what the entire market is doing. And then beyond that, training, lots of training in here. Tuesday interviews. These are ones where Dave Savage comes on every Tuesday. He brings on loan officers. He brings on people in the industry, outside of the industry, giving you sales tools and so forth. strategies. He brings over high producers that talk about how they're making things work for them within this environment. So this is a playlist that is a mile long. So lots and lots and lots of calls in here. They're all hour-long calls. Feel free to rummage through this and just kind of cherry pick what you want to watch. But lots of really valuable information in there. Now we also have our Rate Watch commentary. Dan Rawich publishes a daily video to let you know what's going on in the security market, how are rates going to be performing, what are some of the factors that could affect rates over time for you. So he's giving you a good view into what you should expect and what you should look out for. Should I be looking to lock all my clients because we foresee a rate increase coming soon? Dan's going to let you know things like that. The calendar shows upcoming training events. So these are training events that are available for everybody. As an enterprise group, you're also going to get specific training events for your team based on the strategies that you'd like to show. And then there's the Rate Watch box plot type of chart that just kind of shows you what the mortgage-backed security market is doing right now. You can see where we're at in terms of the MBS market. If you wanted to view alternate coupons or agencies, you can do that in here. You can change your view too. So if I want to look at a month view and kind of see what the charts are doing over time, I can see that. Fortunately, it looks like we're doing pretty well today. Looks like we rebounded a little bit from yesterday and we're back on the rise. I would expect rates to kind of stay at par today unless we get a much bigger rise, and then we might see some rate drops, which would be kind of cool. And I think that is kind of the start to finish on Mortgage Coach. I'll kind of pause for any questions or any commentary that you might have, Chris.
I think I would add, you touched on it, obviously, but the biggest difference between a single user account and an enterprise is, again, the integrations obviously are huge, but the training that is involved. And when someone gets signed up for an enterprise account, the training that Jacob just mentioned, whether online, our YouTube channel, but we also have it when we're onboarding. There's probably, and Jacob, correct me if I'm wrong, but I think it depends on the company, but like 5 to 9 training sessions for your company, depending on what you need exactly. And those are about an hour long each, and you get assigned your own account manager to work with you and help you through the process. So I would say the integrations, but the training is also a very, very big part of it.
And there's also in-app training. So there's a few default training modules that are already built in, and we'll help you build a couple of more during onboarding that are specific to presentations that you'd like to show. But you can see this is pretty simple. It just walks you through what do you need to complete on here. Well, enter a property address. If you don't have it, that's okay. Just put a city and state so that your searches work when you're doing MI searches and OB searches. Get to the goals. What do you want to do? Hey, select purchase a new home. This is a purchase transaction. And then it just keeps going forward as you're going through the products. It tells you, here's what to name it. Here's a sample of what you can use, that kind of stuff. When you get to the very end of this presentation and you've followed all the prompts, you've built your first TCA. Congratulations. So this is just a start to finish on how to build with sample data. And it's really easy to help you get in the right mindset to be able to do this on a consistent basis. But I'll stop there, Chris. I do have to jump for another call here, so I'm going to go ahead and duck out. I don't see any new questions in the chat. Okay. Certainly feel free to ping me if you have any other questions.
Sure. Thank you.
All right. Thanks, everybody. Have a wonderful day.
Joe, if you're still there, I'm not sure if anyone has any questions or if you just want to talk internally after this and get back to me with questions or feedback, comments, anything like that. I'm not sure if Joe's there. Anybody else? Anybody else have any questions? All right, it looks like I lost Joe for a little bit, so I'll get in touch with him. Brett just said, what are the next steps? Really, the next steps are, I guess I'm going to talk to Joe and find out, we had the similar training on Tuesday, And he had a bunch of, you know, LOs and branch managers, you know, talk to him and say, yeah, this is something I'm interested in. So this is really for Joe to gauge the interest level. You know, once he gets enough of that input, then he can get back to me and, you know, let me know if it's something that you guys truly want to move forward with. I'm gonna go from the bottom up. Brett asked about cost. You know, how soon can we get this up and integrated for use? Really, that's up to each individual company, but usually it takes about a month and a half to get everything squared away. But it really depends on the company. Some companies want to go a little slower because they have other things going on. Some want to do it as quickly as possible. So I would say between a month and 2 months for everything to be complete. As far as cost, you know, that's going to depend on some factors, and I'm going to have to go over that with Joe. You know, is everybody all in? How many LOs are interested? Do we want to do this, you know, like I said, all in, or do we want to do it on a monthly basis? So cost will have to be determined. I'll have to go over that with Joe and whoever else wants to be involved. But it isn't just like a one size fits all. You know, here's a general cost. It's going to depend on some factors. I don't see any other questions. Unless another question comes in, I think we're all set. Like I said, I'm going to wait to talk to Joe about this and find out where we go from here. Hopefully there's enough interest. Thanks everyone for coming. Like I said, hopefully there's enough interest. Hopefully we'll be talking soon. Thanks everyone. Appreciate your time.